In today's video, I'm going to teach you how to buy puts fidelity. Before we jump in, a quick foundation. Buying a put option is a bearish strategy. You're paying a premium for the right, but not the obligation, to sell a stock at a specific price before a set expiration date. You profit if the stock falls, and your maximum loss is the premium you paid if the option expires worthless. On Fidelity, you'll need options trading approval, typically level 2, before you can place this trade. Start by opening the Fidelity mobile app or website and signing in to your brokerage account. Once you're in, use the search bar to look up the stock or ETF you're targeting by typing its ticker symbol. That brings you to the quote page where you can quickly confirm the current price and basic details before moving forward. Next, open the options chain. On the quote page, tap or click Options or Option Chain. You'll see calls on the left and puts on the right. Since we're buying a put, we'll be working on the put side. Take a moment to get familiar with the layout, including expiration dates, strike prices, and the bid-ask spread, which tells you how tight or wide pricing is. Now choose your contract. First, select the expiration date that fits your thesis. More time generally costs more, but gives the trade longer to play out. Then pick a strike price. A strike closer to the current stock price will usually be more expensive, but more sensitive to movement. Further out-of-the-money strikes are cheaper but need a larger move to gain value. When you've identified the contract you want, tap or click on the put side for that specific strike and expiration. This opens the order ticket. Set action to buy to open and confirm the contract type is put. Enter the quantity in contracts, remembering that one contract controls 100 shares. Choose your order type. A market order aims for immediate execution at current prices, while a limit order lets you name your maximum price, which helps control cost, especially when spreads are wide. For time in force, select day if you want the order to cancel at the end of the session, or GTC if you want it to remain active until it fills or you cancel it. When everything looks right, tap Preview Order to double-check the details, then place order. To make this concrete, imagine a stock trading at 200. If you buy a 190 put and the stock drops to 170 before expiration, your put generally increases in value. If the stock stays above 190, the option can expire worthless, and your loss is limited to the premium you paid.